I'm going to explain today with stock market for beginners. So today's topic is about stock market basics. I'll be talking about the terminology, how to trade, practice on virtual terminal, and if you have any kind of doubts, you can post it in the last session. I can answer your questions later. So yes, starting with market, we have a very broad structure system. We have a standardized system in our country. We start with SEBI. Of course, we have some other authority bodies above SEBI. That is about we have Ministry of Commercial Affairs, who will be taking care of all these SEBI RBI activities. But to specific about stock market, we have SEBI, Security Exchange Board of India. They have started in the year 1992. We have an act which will control on the entire rules and regulations of stock market in India. Below that, we have exchanges, two exchanges. One is Bombay Stock Exchange, another one is National Stock Exchange. So what you see on your left-hand side is about Bombay Stock Exchange. It's the oldest stock exchange, started in 1875. 1875, it's have more than 200 years of history, guys. The other side we have is NASDAQ. So why we have mentioned here is because that is also one of the prominent stock exchange in the world. So yes, coming back to Indian Stock Exchange, we have two major stock exchange. One is Bombay Stock Exchange, the other one is National Stock Exchange. So when we talk about some history about these two exchanges, in 2001, from 2000 onwards, NSE started with online trading activities. Online in the sense like dematerialization. Earlier we used to have this physical trading used to happen. Like if I want to buy and sell the shares, I used to buy and sell physically. It's very difficult for any person to identify where I'm going to sell my shares and where I'm going to buy my shares. So NSE with the NEAT system, they call it as NEAT system, National Exchange Automated Trading System. So they brought in a system where all these physical certificates are converted to dematerialized in terms of electronic format. So that's why we call it as a demat account. So I'll talk about the demat account in the last few minutes. So in 2000 onwards, NSE came to online system, and 2001 BSE in terms of derivative markets also they have entered. So some few prominent about exchanges, major stock exchange in India. We have NSE, National Stock Exchange. Starts from 9 to 3:30 is the timing. So I'll just brief you about what time we are going to start and how the trading will happen. It is the largest stock exchange in India in terms of daily turnover and number of trades for both equity and derivative trading at NSE. So guys, when we talk about the number of volume, like it's around 140 lakh crore shares volume in terms of volume to be traded on NSE. Like of course there will be like in the recent time after this COVID, we can able to see very good major changes is happening in terms of trading, in terms of volume. BSE again on the same timings, 9 to 3:30. In NSE we have different index. I will tell you about the index calculations and all in the later stage. So we have NSE and we have BSE. BSE stands for Bombay Stock Exchange. The most prominent index in BSE is BSE Sensex, so which is have about 30 stocks. And in NSE, the most prominent index under NSE is Nifty 50, which is having about 50 stocks. And we have MCX, that is Multi Commodity Exchange of India, which is dealing with all the commodities like agriculture and non-agriculture, or we can say metal and non-metal, like all the copper, silver, zinc, gold, currencies. Sorry, not the currencies will not come here. So all will be trading in multi commodity exchange. So the question, yeah, of course, when we talk about few other exchanges, we have two major depositories. I have not mentioned the slide here, but I would like to explain who are these depositories. Guys, we know that like when I have cash in my account, I can cash in an account will be in terms of electronic format. So who will keep this cash in an account? Like few banks, like we have ICICI Bank, we have Axis Bank, we will keep our cash in electronic format. But who will keep who will safeguard our shares in electronic format? Of course, exchange, but exchange will take in terms of trading activities, in terms of clearing and settlement activities. But these depositories will also take in terms of clearing and settlement. Under NSE, we have something called as an NSDL, National Securities Depositories Limited, and under BSE, we have CDSL, Centralized Depositories Securities Limited. What these two depositories, we call them as the depositories. What these two depositories will do? These depositories will help the broker, help the investor, help the exchange to keep the shares in electronic format. So a broker can open an account with NSDL, or a broker can open an account with CDSL. So who is broker? A broker is one like we have ICICI Direct, we have Axis Direct, we have Kotak Securities, we have Karbi, we have Sharekhan. So all of these things are brokers. So I will explain on the brokers and the relationship of brokers, investors, and the exchange later. But I would like to highlight on these terms how we keep our shares in my demat account. How I keep my rupees or currency in my bank account. The same way I can keep my shares in the demat account with the help of depositories, NSDL and CDSL. Yeah. Now, most important aspects to understand: why to invest in stock? Why to invest in stock market? You want to maximize your returns. You want to beat inflation. So, answer seems to be very simple. Like, why I need to invest in market? There are many reasons for investing in stock market. Like, I want my returns should be more than my expenditure. I want some income. Like Mr. Warren Buffett always say, never depend on one income. So it's most important for most of the traders, most of the investors to look forward market as an additional source of income. As I mentioned, the one who lost money, for them it's always like a gambling. They will never come back. If they come back also, they will have a lot of difficulties to understand. So for the one who know about the market, they can always earn a potential return by investing in market. Provided, what is the reason for investing in market? You want to maximize your returns. You have some kind of income you are getting, and you wanted to invest in market so that you can expect a better return on your investment. That is one thing. And to beat inflation. What is this inflation? Again, my expenditures are more nowadays, so I have to have an additional income where I can able to take care of my expenditure. So for that reason, I wanted to invest. Invest early, invest regularly, invest for long term. We always say invest early, invest regularly, and invest for long term. What is invest early? Early in the sense like what the time you start earning or the time you start getting some kind of pocket money, it's better I start making a kind of a provision for my investment. Of course, now if you are a minor, it is very difficult for you to open a demat account. But for you can go with mutual fund. You can start investing in a mutual fund, not direct investment, but in terms of indirect investment, you can always make an investment. So early investment is always better. Regular investment, like if you have a practice of investing in a weekly or a monthly, make sure that you do it on every weekly or a monthly basis. Like of course daily it's not possible, but depend upon your income earning capabilities, you can start making investment regularly and invest for a long term. When I say long term, please don't look forward for next 5 or 10 years, not less than 5 years. I have few statistics here I would like to show. I've taken a screenshot from different website. I will show that particular screenshot. The time when we started understanding about the market from 2007, 2008 financial crisis. So the Nifty was trading somewhere around 5,000 and Nifty now trading around 14,700. So in a matter of 10 years, in a matter of 13 years, it has given a return of more than 300 times. 300 times. So invest for long term, investment for long term. You want to beat inflation because my expenditure is always be high, so I have to beat those expenditure. For that reason, I have to invest because my income should be more than my expenditure. How to invest in stock market? So we have a broker. A broker is a party that mediates between a buyer and a seller. A stockbroker is a regulated professional broker who buys and sells shares and other securities through agency firm on behalf of investor. As I mentioned, like if I want to open and if I want to buy shares, what I have to do? First, I have to identify the good broker. So why do I mention good broker? Because there are many brokers out there who will not provide you a better platform for you to buy and sell the shares. So what is required? You have to identify good broker who have a proper system, in terms of technology, in terms of the services, or in terms of the investment tips. What do they provide? Yes, here I'm not marketing anyone. Please don't mind. Like there are a few brokers who spend most of their income in terms of their research, in terms of technology, in terms of strengthening their connectivity system. So I can take few names of them, like Motilal also. Like what do they do? Like they spend most of their money in terms of their research. Whenever I receive any call from Motilal also, we can blindly buy some stocks, keeping some stop loss, keeping some like based on my risk appetite. So I have to identify the right broker and I have to open a demat account. So there are a few procedures will be set by the broker and you can start buying the shares. Yes, when we talk about brokers, broker plays two different roles. One, in terms of opening a trading account, opening a demat account. What is trading account? It's something like I wanted to buy a share. To buy that share, I given a unique client code. That is, I'm an investor and I'm a client for my broker. So a client code will be given. Based on that client code, I will buy and sell the shares. So to buy and sell the share, I need to have trading account. So if I bought the shares, after buying the shares, I have to keep my shares in one place. So for that reason, I need to have a demat account. So demat account is being provided by with the help of brokers itself. Again, the demat account is being linked with NSDL and CDSL, as I mentioned. So if you buy the shares, either if the broker is tied up with CDSL, your shares will be with the CDSL, that is Centralized Depository Securities Limited. Or if the broker is tied up with some other depositories, that is NSDL, and your shares will be with the NSDL. there is no much of differences with respect to NSD or CDSL. NSDL operated by NSE, CDSL operated by BSE. So again, the broker will act as an intermediary between you to buy the shares. Where you are going to buy the shares? With the exchange. So every broker will have trading account, and the broker will have tied up with the exchanges. So the broker will act as a mediate between buyers and sellers. So now I wanted to buy the shares. So the broker will help me to find the sellers. Seller might be sitting somewhere else, and they will provide a platform, that is in terms of my demat account, in terms of my trading terminal, I can buy and sell the shares. Renowned online stockbrokers in India, we have RBI, ICICI Direct, India Bulls, Angel Broking, Indian Infoline, Sharekhan, take few names. There are many brokers are available in India. So this is about demat account. The term demat in India refers to the dematerialization account. In a demat account, shares and securities are held in the electronic form instead of taking actual possessions of certificate. So as I mentioned earlier, we used to, earlier in the sense before in the 19th century or in the 1990s and all, we used to hold the shares in physical format. So what used to happen, like in physical format, there could be chances of a paper can be stealed or any other chances could have happened. And the most difficult for a physical transaction is to, like, it's very difficult for me to identify where I have to sell my shares. So it's very difficult for the sellers to find the buyers. It's very difficult for the buyers to find the sellers. And after some time, like the dematerialization account has formed, that is, the shares has been converted from physical to electronic format, and you can start finding your counterparties, the buyers for sellers, sellers for buyers. So here, this is what some sample just I'm trying to provide here, stock holding. So if I say script ID, like I have Bajaj Auto here. So Bajaj Auto, like 100 quantity, buying price 1568.4, market price 1580.65, profit or loss. Like I used to buy and I used to sell the shares based on this particular contract price. So what is most important here is, like, I would like to highlight on one more important point when we have this sign here. So guys, we don't have Punjab National Bank fully written here, like it's not fully expanded like Punjab National Bank, RL, Reliance Industries, Union Bank, not fully expanded. So there is an terminology what we use, what we call as symbol. All the stocks in the demat account are identified two different ways. One using ISIN number, International Securities Index Limited, some number will be there. Every stock, every shares will have one number. Every share will have one number, and every share will have different symbol. I don't use Infosys. I say INFI. I don't say Tata Consultancy Services. I say TCS. So short forms will be used to identify the shares in demat account. So the flow chart of buying and selling of shares. First thing is open a demat account. Attach with brokers or sub-brokers. So the broker will help you to open your demat account. Once you have opened your demat account, a computer terminal with ODN software. So this is a different software will be given. So we have ODN software, we have ODN software. Nowadays everything through smartphone. So is it ODN or ODN doesn't matter to me. So I have my applications. I can open my account with some broker, and the broker will have some kind of applications. Download the application. The broker would have been given me some user ID and password. Type in those credentials, and your account is activated, and you can start viewing your price of any stocks. You can buy through phone, you can sell through phone, you can invest through phone, like fund transfer or withdrawal of fund. All the things can happen through your applications. So that is one of the best platform what we have now here, and you can able to understand what is how to read the graph, charts, everything through that phone with that particular platform. So I will talk about the technical analysis in the next part after this session. So that is a terminal will be given. I can tell you like how this terminal looks like. In the last slides, I have mentioned that one. So get username and password. So when we have this terminal, as I mentioned, you have user ID and password will be given by the broker. Login and trade shares. You can buy or sell the shares. Buy share to move to your demat account. Sell the shares to move to your demat account. So if you are buying the shares, that will go to your demat account. If you are selling the shares, that will be coming out from your demat account. So this is the very simple and very simplified flow chart which will help us to understand how the demat account operates. Yes guys, there is some interesting fact, like till now what we try to understand is like who are the major participants in the stock market. We discussed about SEBI, we discussed about the exchanges, depositories and the brokers. So let us try to understand what is this index, how it is calculated. I can say that terminology of the market, the jargons of market. The system here is what we will be decided as either I'm going to be an investor or I'm going to be a trader. So what is index? It's a mirror of the market. So if I say yesterday the market has recovered by 1,200 points, day before yesterday the market has recovered by almost like 1,500 points in Nifty. We are talking about from 13,600, the market is now around 14,800 range. So why the market has recovered? Because of budget. Budget was beyond market expectations, and all the stocks started recovering, especially more of banking stocks, because 20,000 crore of fund is being declared by the finance minister to all the banks to take care of their all banking and financial activities. So if market is recovering, that's a clear indication that the economy is doing good. And if the market is coming down, of course, its economy is going to be somewhat down. So that's what market index is a mirror of the market. How the top companies are performing. Calculate by using the weighted of two specific securities, example Nifty 60, Nifty 50, Sensex, Bank Nifty, etc. So if I'm talking about index, it's talking about how the top companies are performing. Like if I take an example of Nifty 50 here, in Nifty 50 we have 50 stocks. How these 50 stocks are performing? So that has been represented in terms of index. So there could be chances where out of 50 stocks, only 35 to 40 stocks are doing good. So we call them as advanced, and 10 stocks are doing not performing really good. It is trading in a negative. That is, negative means what? From previous day closing, it is trading below the previous day closing. So negative, decline. So how these stocks are performing? If all the stocks are performing doing good, we call it as plus in market index. If it is minus, it's negative. Calculated by assigning weight to specific securities. Guys, here is what we are trying to understand. So I just wanted to use some kind of calculations here, but I will explain orally. If I feel it's required, I will go and explain in terms of calculations. Say for example, how the index is calculated. We use free float methods. What is this free float method? It's a formula to calculate that. What do we take here is like okay, let me give an example. Like suppose, let me say in index there is only two stocks, stock A and stock B. Stock A, company has issued let me say 1,000 shares. So company has issued 1,000 shares. Out of this 1,000 shares, only 800 shares are trading in the market. Company has issued 1,000. In 1,000, all 1,000 will not be traded. Only 800 has traded. So 800 per share price, let me say 100 rupees. So 800 how much? 8,000. But how much each shares has been given by the company? Let me say company A has issued 1,000 shares. So 1,000 into 100 is 10,000. But what is the total value being traded in the market? Only 8,000. So 8,000 divided by 10,000. 8,000 is a volume which is traded, divided by 10,000 is a volume which is supposed to trade. But it has traded only 8,000. So we get somewhere around 80%, 0.8. Again, stock B. So that is what the weightage here. 0.8 is a weightage for specific security. For A, 0.8 is a weightage. Next, 0.8 is for stock A, and again we'll talk about stock B. Again, we got somewhere around let me say 0.5. 0.5 we got it. So how do we calculate free float? Now, how much shares has been issued? Initially, that is 1,000 shares at 100 rupees. That is 10,000. 10,000 into 0.8 plus another could be like some other number divided by some base price. What is this base price? This Nifty or BSE Sensex has formed somewhere in the year 1978 or 75. So at that range, what was the base price? What was the base price in the year 78 or 79? I will take that number into 100. Into 100, I will multiply. I will get some number that is called as, I will get some number, and that number what is represented as index. So I know I'm not representing any examples here. I was supposed to give it, would have been even better. But how to calculate weightage is about, first, how to calculate index is all about the weightage. So we are taking the weightage first, multiplying with the initial value, that is 10,000 into 100. 10,000 is 1,000 is the shares issued by the company. Currently it is trading at 100 rupees. 1,000 into 100 into weightage plus the other companies. Likewise, we'll be adding for all the companies. If it is 50 stocks, all 50 stocks will be added. Divide by the base index into 100 is what we are going to calculate the index value. So in Nifty 50 we have 50 stocks, Sensex we have 30 stocks, Bank Nifty we have 12 stocks, and likewise we have different index. We have for pharmaceuticals we have Nifty Pharma, IT we have Nifty IT, for PSU banks we have Nifty PSU, and we have Nifty 500, Nifty 100. So what is this? Like why there is a lot of differences? See, it's if you go back and try to understand, there are 4,000 shares are there in NSE. So you can't have one index for those 4,000 shares. It's very difficult to monitor all 4,000 shares. So what best the index or the exchange has done is, like they have made few groups. Like for Nifty 50, let me add all the sectors, all 13 to 14 sectors or 16 sectors we have, all different sectors. In each sector, a prominent stock having more volume traded will be taken into the consideration to identify how the market has been performing. So, who will decide the 50 stocks? Of course, exchange. On what factors? Based on their financial performance, based on the demand ratio in the stock market. So, based on that, they will take the 50 stocks. And NSE and BSE have all the rights to include that in the index or to delist from the index. So, few companies are mentioned here. 50 companies, Nifty 50 companies. Like, of course, it's a old data. Like, as I mentioned, we'll keep revising based on exchange decisions. Bull and bear. Yes, guys, I'll just one question we always have: why we have bull, why we have bear, which we'll talk about market. So bull is a one. He's a person, like not exactly a person. If I say I'm bullish on market, I'm bullish on market means what? I'm expecting market will recover, and I'm bearish on market. That means that I'm expecting market will come down. Why we use bull and bear in market? It's always saying that there are two reasons to understand. Bull character is to push the things on the upside. That is one way we understand about the bull. The other way is bull is being used in terms of cultivation to grow something on land. So that is why we use bull. So whenever we talk about market will recover, we say bullish market. Market is bullish. Or to talking about a person, the person is bullish about the market. That's what we always try to say that. Bearish, the characteristics of bear is to squeeze the things or to just a grown food just being eaten by the bear, or just to demolish few things. That's what we can try to understand. So it squeeze the market. So it's a characteristics of bear is to squeeze. So it will bring down the market from higher level to the lower level. That's why you use bull and bear. And there are many different animals. We will talk about lamb, duck, a few other names. We will look into this. So we have tried to understand the participants and few terminologies about market. We'll look into this. How does market terminal looks like? This is old data, but because this is old data, but because this platform is not available in your phones, that's the reason I'm just trying to highlight this. This is how the market looks like. So there are many factors which we can discuss here. As I mentioned, 5,866 was the Nifty when it was trading in 2008 and 9 before Lehman Brothers crisis. Before Lehman Brothers crisis, it was trading around 4,000 to 5,000 range, and after this Lehman Brothers crisis in the year 2008 and 9 recession time, it reached to 2,200 Nifty, and from there now it is trading at 14,800 range. Guys, there is a lot of potential in the market. So why I mentioned a lot of potential is because like invest early, invest regularly, invest for long term. When we look at stock market for a long term, we have quite a bit good returns which we can able to find in market. Again, what kind of stock you select, it's up to your own decisions in terms of understanding of the market. So all this data is from NSE. We can see, and NSE and BSE data, like we have NSE, like NSE exchanges are mentioned here, normal equity. So we call it as equity, B1, S1. There are different terminologies we'll be using here. What is this? EQ stands for equity. A is again, like we give grading, like most of the BSE stocks will not come with, most of it will be equity, but we have different terms used as A, B1, S, TS, B1, and E. They use a word called E as well. So trade to trade will not be there. That means that something like if you buy today, you have to sell after some days only. You can't sell today itself. So there are different things. Better not to get into those terms right now. So how to identify stocks? Based on the symbol. As I mentioned, you will not get the stocks with full name most of the cases, but you'll be having it short form: GTL, Tata Motors, DVR, Tata Motors, Supreme Industries, DFL, Religare, Lupin. So the symbols are the one way to identify the stocks. So we have buy quantity, buy price, sell quantity, last traded price, percentage change, close, open, high, low. Open, high, low aspects I will explain in the technical analysis. What is the importance of the rest of the part? But here we'll try to understand what we need to look at here: buy quantity, buy price, sell quantity, last traded price. So when we talk about buy price, it's a bid, and sell is about ask price. So different, again, goes with a different broker, have different platform to understand. So if I want to buy, what I have to do? I'll just take that part in the last minute. Like if I want to buy, what kind of, how does the order will be placed in terms of different terms? Guys, here we will be decided what kind of a person I am. Like, is it I'm an investor or I'm a trader? So if I buy and hold the shares for a few days, like if I buy today, that is today is 3rd of February, I'll buy. Next year, I'm going to sell that stock. So I'm a delivery trader. Sorry, I'm just taking the stocks for delivery. That is, today I'm buying, I'm holding the stock for tomorrow. I can call myself as an investor, or the people will call me as an investor because I'm holding the shares. So what is day trading? As and when the market opens at 9 o'clock, 9 to 9:15 is a pre-market session. I'll explain what is that. 9 to 9:15 is a pre-market session. From 9:15 to 3:30, I can do any kind of transaction. Either I can sell, I can buy back, or buy, I can sell back. Equities, if you are buying in equities, you have to, in intraday, you can sell at 9:15. Within 3:30, you have to buy back. If you don't buy, what happens? Again, that's a different thing. That will go for an auction. So auction will happen T plus 3 trading days. I will explain that two aspects right now. So let me explain about the delivery. So delivery is what? Buying the shares, holding the shares for to sell tomorrow. Buy today, sell tomorrow. I am taking delivery. Tomorrow can be tomorrow, next day itself, or I can hold it for very long time. Very long time I can hold the shares. But for day trading, I have to sell. I can sell in the morning equity. I can buy back, or I can buy at 9 o'clock and I can sell at 3:30. Day trading. If I take it for next day, I don't call it as day trading. It's called as delivery. So now, let me say I have taken it for delivery. I am an investor. I have taken it for delivery. I'm supposed to have 100% cash in my demat account. I am supposed to have 100% cash in my trading account. Then only the broker will allow me to buy. Let me say I have about 10,000 rupees in my demat account. I have bought. I have decided to buy some shares worth of some 10,000 rupees. So on so quantity, so on so price. The value of my investment is 10,000 rupees. So after, as in when I buy, the shares will come to my demat account? No, it will not directly come to my demat account. It will take T plus 2 trading days. What is T plus 2? T is a trading day plus 2. That is today's Wednesday. By Friday afternoon, you will be having shares in your demat account. T plus 2 trading days. Let me say the broker, you don't have so much of cash in your account. Can the broker will allow you to buy the shares? Yes, depends upon the broker. If the amount is around 5,000, 10,000, now the exchange is very strict. SEBI has given some different guidelines in terms of client's margin, what we call it as a margin. Money, nothing but very in simple terms, it's called as in money. So if I want to buy, earlier the provision was there. Let me say you have 5,000 rupees, but you wanted to buy some 5,000 rupees extra. Will the broker allow you to buy? Depends upon the broker. The broker can give you a limit to buy. So when you have to do the settlement, T plus 1, trading day plus 1, T plus 1, you have to make the settlement. That settlement means what? You have to give the check to the stockbroker. No cash, only check, or fund transfer can happen. So if you are holding the shares, you can hold till the insolvency of the company or till the company exists. You can hold it. So for day trading, market opens at 9 o'clock, but the actual trading will start from 9:15. So what happens from 9 to 9:15? 9 to 9 a.m. to 9:08 a.m. you can place the order, and if you want to cancel the order, you can cancel the order. If you want to modify the order, you can modify the order. From 9:08 to 9:12, the matching will start. Like you have placed the buying order, someone has placed the selling order. At 9:08, within this 9:08, you have to place a buying order, the other will place a selling order. Modify, changing, cancel can be done at within 9:08 a.m. After 9:08, you can't cancel, you can't modify, you can't do anything. But what happens from 9:08 to 9:12? The matching will start. Like you have placed a quantity, like 100 quantity at 80 rupees for one stock. Someone has placed the 100 some quantity at selling at 80 rupees. So order matching will happen and the trade will get executed. From 9:12 to 9:15, the settlement, like big volume settlements, will happen at that particular point in time. What is the reason for this? Like there was a time where if the news is released like after the market hours, that is Friday 3:30 or 4 o'clock, some bad news came into the market. So what? Just imagine what will happen in Monday's market. Monday, if market opens at 9 o'clock, what will happen? A major fall in that stock. Whether the stock is major fall in that stock price. For retailers, that is for a person who trades with very less volume, we call it as a retailer. For those, if he has bought the stock on Friday or could be on Thursday and he wants to sell on Monday, he may not be able to get a chance to sell the shares in the morning. So that will be very difficult for them to place this order or to sell the order. Just to avoid these kind of difficulties in the market, the exchange has decided, let me have from 9 to 9:15, let the market get settled. Whether news is good or bad, let the exchange, let the demand and supply, let the market will decide rather than with any one individual person. So because of this, we have this 9 to 9:15 market settlement timings. So that is about the delivery and that is about the day trading. Delivery, you have to have 100% cash. For day trading, yes, you can borrow money from the exchange, you can trade. Yes, here I would like to explain about few more points. I'll just look at the time here. We have time, right? So one important concept I would like to explain here. there are few products. To better for understanding, we'll call it as a product. Equity as a product. The other one is derivatives. So what is derivatives? Something which has been derived from an underlying asset is derivatives. So what is underlying assets? Equity is an underlying asset. Index is an underlying asset. Commodity is an underlying asset. Let me say Reliance Industries is an underlying asset. If in equity, you can buy one share, you can buy 1 lakh shares, you can buy 1 crore shares provided by if exchange will allow you to buy. Because 1 crore shares and all, you have to have a very strong network, you have to have permission from your brokers, from your exchange in order to buy so much of shares. I'm not saying it's not possible, it's impossible, it's possible, provided with some documentations and some permission. In derivatives, you can't buy one share. Derivatives is what? Derivatives is something like derived from an underlying asset. I derive the values. How the equity price moves based on that derivative will also move. Why it is required? As I mentioned, in day trading, you have to, if you want to sell any share, first thing you need to have in your demat account. You need to have the shares in your demat account to sell the shares and to buy back tomorrow. Or if you are a day trader, you can sell in the morning at 9:15, you can buy back at 3:30. Within 3:30, you have to buy back. That will happen. Suppose you know that the stock is going to come down, and you wanted to take some selling positions, that you want to sell something like, I will not talk about the other aspect, like there is something like strategy we use here, hedging, arbitrage and all. I will not talk about that one right as of now. So I know that stock is coming down, the stock will come down. So what I can do, how do I make an opportunity, how do I convert this news as an opportunity in terms of my trading? Can I do this? Yes, you can do it with the help of derivatives. So what happens in derivatives? You can't sell one shares, but you have to sell a lot. That is a lot size. Again, it is decided by the exchange. For Reliance Industries, lot size is 550. That has been decided by the exchange. 550. What is the price now? It is trading somewhere around 2000. Let me say 2000. So for better understanding, we'll say lot size is 500 and 2000 is a share price. So 500 into 2000 will be 10 lakhs. So if you have 10 lakhs, you can take a selling in Reliance Industries in derivatives. But you need to pay 10 lakhs, question mark. The exchange has decided, the Bombay National Stock Exchange or Bombay Stock Exchange will say that you need not to pay 100%, that is 10 lakh rupees, you can pay only 20% of that, 30% of that. Thanks to COVID, they have increased the limit to 70%, 60%. That means that if you want to take position, that is if you want to trade, if you want to sell, or if you want to buy Reliance Industries in derivative contracts, we call it as a contract, you need to have 70% of margin. For some stocks like Indiabulls Real Estate and all, 120% margin. Guys, you please go to NSE exchange, you have all this information. NSEindia.com. I will talk about some website in the last minute. So, where I was, like in terms of margin. So, you need to have 60% of margin, 70% of margin. That means that if you pay 7 lakh rupees to the broker will allow you to take position. We call it as a positions in derivatives. You can sell. Let me say you sold at 2000 rupees, and as per your news, it came to 1950, 50 rupees. So 500 into 50 is about 25,000 profit for you. What is the reason for derivatives? Again, there are many reasons. Like it will help you to hedge your positions. It will help you to take an advantage of these kind of news. It will help you to, if you are very clear about technical analysis, if you know that market will come down, it will help you to take part in those things. And leverage, like with small amount, like 7,000 rupees, 7 lakh rupees, you have made a profit of 25,000. If you calculate the returns, it will come somewhere around, let me say 0.1 or 0.2 percentage. 0.2 on day one, you calculate for year, it will be like 40-50 percentage CAGR, something like that. I'm just taking on optimistic, being on optimistic. So delivery of stocks can be done, day trading can be done using equity or derivatives. So I'll not go much into derivatives. I'll just tell you, like in derivatives, we have 3 major derivatives, which products of derivatives which will be traded. One is futures, forward, options. Again, futures and options are standardized. The one is forward is OTC market. Like what is standardized? The exchange will take care of it. Like stock exchange will monitor all these transactions. Okay, let us not talk about too much about those derivatives as of now, because derivatives is another big ocean in the market. So it's not that easy, difficult to understand, but a lot of observation, a lot of not training, but in terms of a lot of reading is required. And few terminologies you have to understand. Then only it will be easy for you to take part in derivative trading. So yes. Yeah, delivery, day and high is done. Yes, as I mentioned, like in the last few slides, I have mentioned about few parts about few aspects about the price. price and volume are the two key elements in trading. When we talk about fundamentals of stocks market, price and volume are the two key elements. If you talk about from the financial analysis point of view or from the technical analysis point of view, price and volume play a major role, because it will help you to understand how the market is performing. If price is going high, volume is coming down, what do we say this? If price is going high, volume is also going high, what do we say this? Price is coming down, volume is going high, what do we say this? Both are in the same range, what do we say this? So there are a lot of aspects which will come, will help us to understand. We call it as an open interest. That's a different name. Of course, for every task there isn't one different name will be given, but you need to understand based on what kind of trader we are, what kind of investor we are. Last trading price. When you talk about price, last trading price. Last trading price is about, could be like, if I'm talking about yesterday, what was yesterday's last trading price? Or if I talk about next few seconds, like what was the last trading price? Like now time is 10:30 and 1 second. So what is it? Trade at 10:30 a.m. So 1 second, what is the price? 2 second, what is the price? 3 second, what is the price? Because price changes and every second the price will change. So last trade price is about the past trade price. Open price is the price what the market will open. Let's say, as I mentioned, 9 to 9:15 market will get settled, and the market first price it will be traded. What price the market will open? That is the opening price. Closing price is previous day closing price. Days high, today's days high. Days low, today's days low. Guys, these things again I'm going to repeat when we talk about the technical analysis. 52-week high, 52-week low. This is again one of the most important parameter to decide about whether to buy the shares or not to buy the shares. If the stock is trading at 52-week high, I being a trader or I being an investor will look forward, okay, if the stock is already trading at 52-week high. What is 52-week high? Past one year high. It is already trading at 52-week high. Whether I have to buy the stocks or not to buy the stock, I can decide, or how far the stock is away from this 52-week high or 52-week low. If it is 30-40% differences, it's better for me to buy, because that stock anyway it has reached 60%. Another 40% it might reach. Or downside, if the stock is already coming down, like almost like 70% it has reached towards the low. So it's better I can wait for some more time to buy the stocks. Anyway it has reached 70%, another 20% can reach, and I can enter the stocks. So there is a price in terms of terminals to understand about the price. Yes, here there are a few aspects which is mentioned in terms of understanding about the price change. As I mentioned, open price. Today, what price the market has opened? Made a high 5141, made a low 5049. Last traded price LTP 5127. Change. So how do we calculate change? From my previous day close to the current market price, what is trading now, or last traded price? The difference is what? The difference is 1.61%, or in terms of rupees, 81 rupees change. So if we have my closing price, it will be easy to understand, easy to calculate. We don't have the closing price here. Those price is not given. Yeah, 5127 minus my previous day closing price, I will get some number. So that is my in terms of rupees or in terms of percentage. Volume, most important. As I mentioned, price and volume are the most important component or the variables to understand about the market. If volumes are really going high, that shows a clear direction about what is happening with the market along with the price factors. Total turnover, 52-week high, 52-week low, adjustment value. Again, this is not much required as of now. So orders and trade, we'll talk about the orders and trade here, but I'll give you some input on this. A bid you are putting into terminals, trade bid which are executed. So what kind of orders we have? Yeah, three most important orders. One is IOC, LO, MO. IOC, immediate or cancel. So I can find out here. Yes, it's not mentioned. Okay, fine. Guys, when we see something like day here, right? So the day here we have something called, we can select the thing. Like I have selected dynasty, regular lot, code of every securities will be having a different code, as I mentioned, ISIN number, which stock, which symbol of a stock. I'm buying in equity, number of quantity, how many numbers you wanted to buy. Like starting from 1, you can go to the maximum extent. As I mentioned, in equity, you can start with 1, and the limit depends upon you and depends upon the broker limits. Price, what price it is trading now? It is trading at 251.80. For always remember, for buy, you have to look at the selling price, because if someone is selling, you can only buy at that price, 21.80. Let me say now the order comes here. You are not willing to buy at 251.80. You will say that I don't want to buy 251.80. I would like to buy at 251. So what is that 251 is? Now look, if you find out 251.80 is there here, or you can find 251.80. If you don't want to buy at 251.80, you can mention some other price. You can say 251 rupees. So what is a 251? That is a limit order. You are limiting yourself to buy. If the price comes to 251, then only I'll buy. 251 is my limit price. So CLE is client. So why we have this client and pro? The broker can buy on behalf of you. If the broker will buy on behalf of you, it's called pro. If you buy from your end, it is called client. The rest of the information is not required. Again, margin, it's a different thing. So that is one limit order. What is market order? I'll say whatever the price is there, I will buy 251.80. So what happens if the time you place an order, if the price has changed from 251 to 251.90, that you will not be able to buy that stock. You will not be able to buy that stock. So 251.80 will be there in your terminal as a pending order. It will be there as a pending order. So now you say that I wanted to buy immediately. So what you do, you will select one, you will select 251.80, but in terms of validity here, you can able to find the validity term here. You can mention IOC. That means that what? If the price is, if I wanted to buy 251.80 only, if the order is not executed means trading match with buyers and sellers, it is not matched, it is not executed, cancel the order immediately. Cancel the order immediately because you wanted to buy 251.80, immediate or cancel. Limit order is 251. If the price is sitting at 251.80, you will place at 251, that is limit order. Immediate or cancel, you want to buy 251.80, that's the best price you feel, and you place an order. If order not match with buyers and seller, cancel the order, IOC. What is market order? 251.80 is the price, you will place the order. If it buy. If not, be in the pending order so that as and when it comes to that range, you can buy that price. That is market order. So this, when we have this blue sign, it's a time, like it indicates it's a buy order. If it is a red, it indicates sell order. So buy and sell, we need to understand that terms. Yeah, I already mentioned about the margin here. I don't want to talk about the margin, market price, limit price, margin. I've already mentioned. So short selling, short covering, stop loss. Again, guys, something which is important for us to understand about these terms as well when we are in the market. I already explained what is short selling, but I have not used the name called short selling. As I mentioned, in market for everything there is a name. As I mentioned, Reliance Industries, you are expecting it to come down, but you don't have shares in your account to sell and buy after tomorrow. So what you can do, you can make use of derivatives. In derivatives, it is not an equity. It is an contract. Why it is a contract? Because this comes with the terms and conditions. If I say contract, we have something called as a time frame for all the contracts. There will be a time frame. We call it as current, near, far. I don't have derivatives here. Current, near, far is this month. February is current. Near is March. Far is April. Last Thursday of the month, contract expires in equity. Last Thursday of the month. So you can find out like this Friday is last Thursday of this month is somewhere around, let me say 26th is the last Friday in this month. So February month contract will expire on 26th. Okay, coming back to short selling. What is a short selling? As I given an example in the previous slide, 500 is a lot size. You will sell you wanted to sell because you are expecting Reliance to come down. Why you are expecting Reliance to come down? Because of some technical reasons, like technical reasons, and technical analysis says that the stock price can come down, or there could be some news you have heard, like this time the annual report is not so going to be so good. You might feel like the stock price is going to come down, and you will take a selling order. So in derivatives, I don't call it as sell, but I will call it as short selling. So what is short selling? Without holding the contract of Reliance Industries, you are selling the contract. You are selling the contract. Without holding the contract of Reliance Industries, you are selling the contract. You will sell and you will buy after some time. So when if 100 traders will do like this, the whole thing called as short selling. And if all the 100 investors start buying, that is called short covering, because you have shorted at some 2,000 rupees. Now what will happen if all 100 will sell from 2,000 rupees? It will start coming down because there is selling pressure on the top. There is selling pressure on the top. Everyone will start selling. Short selling will happen. And 1950, you will feel like it's a good time to buy. Cover your positions. That means that the positions was open. Now you are covering the positions. Short covering. You will start buying. And again, with all of you will start buying. Short covering. Short selling without holding, I'm selling. What is short covering? The short I have done. I have sold at 2,000 rupees. I'm start buying that. That is short covering. And we have something called stop loss. What is a stop loss? Given an example in the previous concept here, 251.80. Let me say you have bought the stock. 251.80. You have bought it some 1,000 quantity. 1,000 quantity you bought. and you say that I don't want to lose too much of money here. So what you say, what you do here is you place in selling order, selling stop loss, because you already bought it, right? So you go for selling stop loss order. How to identify that one? You will be having, yeah, regular rod. You will be having somewhere here regular rod or a stop loss order called as SL. It comes as SL. You place stop loss order. What is the stop loss order? You don't want to lose less than 250 rupees. What price you got? 251.80, but you don't want to lose less than 250 rupees. You will call your broker and say that, boss, if it comes to 250 rupees, please inform me. I would like to exit. I don't want to lose less than 250 rupees, because 1.8 into 1000 is about 1800 rupees loss. I don't want to lose beyond 1800 rupees loss. But broker is a person. He may forget, but system will never forget. What you can do, you can place an order 250 rupees as a selling stop loss. You will place the order and you will go. You can roam anywhere you want it. And along with that, you can place a selling order as well. If it comes to 250, execute the order. That is, close my position. If not, if it goes to 258, sell. You can place selling order in a two different way. One in the stop loss order or in terms of selling order. So what is stop loss? You are giving an instruction to the system saying that don't lose beyond this limit. Stop the loss. Stop the loss beyond 250. That is what stop loss orders. Yeah. I will again. I just give few inputs on this, and because the next session has to continue along with the technical aspect, so I'll explain on this one, and I'll move to the other part. Guys, just a minute. Guys, I still have some more time, right? 10 minutes. Okay, fine. I'll just take another 10 minutes, and I'll conclude this session so that we can move on to the next concept. Now we have understand the terminologies. As there is no such a standard for us to understand the market. We say that reading books will help you to understand, but market is unique. Market is something like it's a character. It's characteristics of a different person. Though you will not, if you are not behaving the same way every day, how can you expect market will behave in the same way? Because market is embedded with emotions. Market is embedded with technicals, fundamentals, along with that emotions. That's why we say, if I want to do an analysis on the market, I have to do three analysis. One is fundamental, technical, and psychological analysis. How to do psychological analysis? Is it really possible to do it? Like there are some statistical tool, like we have market profile, we have something order flow analysis, volume spread analysis. There are different tools are there which will help us to understand to some extent how the market is going to behave, like which direction is market is taking towards. So that's a different thing. We'll not disturb right now. So most important, like two different analysis, what we can always go and do the analysis is fundamental and technical analysis. Fundamental analysis. I will give a very simple example of to understand. To buy a stock of automobile industries, I need not to be an automobile engineer. Very bad example, I know that, but still holds good. To construct a house or to buy a house, I need not to be a civil engineer. Likewise, to buy any stock, I need not to be any kind of a qualified person, say for example CA or anything like that. It's very simple to understand. It's very simple to understand about the market by doing some analysis. What kind of analysis? If I want to buy a stock on the fundamental analysis, what is required for me? I wanted to see the past performance of the stock, like historical data. I'm looking at the current conditions of the stock of the company with respect to the management, with respect to the clients they have, with respect to the orders they receive, with respect to kind of business expansion they're looking at. So all this matters for me. And based on this, I'm going to judge the stocks based on the future prospects. This stock is going to go high because the past performance and the current conditions will give you a clear indication about how the stock is going to perform in the next coming days. So there are few indicators, more or less we will be using here. I'm not saying these are the standard parameters to use to analyze on a stock. Likewise, analyzing a company accounts, business profitability by using like P ratios, EPS ratios, book value, or EV by EBITDA, you will study in the next coming days, guys. So the most important, if you ask me if you're the most important for doing fundamental analysis about your the company's management, the company's current orders, and the current company's source of funding, application of funding, and the company's investment opportunities. Few things matters a lot when you look at to buy a stock, and all these data are available. Where it is the data are available? You can go and find out cash flow statement. You can go and find out your fund flow statement. Cash flow statement will give a clear idea about like how to select the stock. Like what are the sources of fund? What is where the fund is being coming from? Is it from the investing activities or financing activities or from the operating activities? So these factors will help you to understand and make decisions to buy that stock. Yeah, I don't want to talk too much about the fundamental analysis because here I would like to stop and continue with the technical analysis later. But again, on the fundamental analysis, three most important factors, EIC, what we call. One is economy, one is industry, the other one is company. So you have to understand how the economy is performing. Like now the economic condition is really good. Now the time for us to enter the market. Then in the industry, which industry is going to perform really good? Like in the recent time we found the budget, there is a lot of subsidies and financial supports, financial aid is given by Ms. Nirmala Sitharaman to finance industries, financial institutions, healthcare sectors, and most of the electronic goods is going to be costly, and gold is going to be come down because of they've cut down on the customs duty. So you can analyze. This is how we are going to analyze on the stock, and we can buy the stocks or buy the commodities. Technical analysis is historical price movements on the charts for identifying pattern in the share price. So here it's all about identifying the pattern, identifying the trend lines. Based on the historical price movement, I'm going to decide how it is going to be in the next coming days.